In this video, we are going to be analysing MEGL. So one thing I do want to note, obviously yesterday, or well on Friday, we did hit that 52-week low at around 360, and actually it's all-time low because it is a recent IPO. Now one thing to note, obviously if you are bag holding, please try and get out of this stock as soon as possible, because the problem you're having right now is obviously we keep seeing the Fed increase interest rates, and all this does is hurt equities. So knowing that news, the ones that are going to get hammered the most are the ones that will be heavily indebted. And things like MEGL, anything really that is a recent IPO, is most likely using a lot of debt, because more than likely they are looking more for future growth, compared to those bigger blue chip stocks where they can easily pay off that debt if it was needed to. So in a high interest environment, they're not too affected, or not as badly affected as other stocks, but definitely stocks that require debt are going to be definitely selling off, because again the earnings are going to be much weaker, and that's how we know stocks move on their future forecasted earnings. Now, if we do get a pop for any reason though, what would we be paying attention to? And we would be paying attention to $15.50, $19.50, and then really breaking through there would be $38, $50, $59, and final levels taking us to around 78/80, and a final one at $107. Now obviously these are very far off. The likelihood of hitting these upper levels, not all that much, and the only reason these levels are so high is because the 3 days it IPO'd, or like the 3 first days of it trading, it just had such crazy momentum that it has made its deviations just so wide. So these levels will still hold. If the stock was to pump, these are levels where we would most likely see resistance. But the likelihood of actually getting to these levels is probably not all that much, considering what we said at the beginning of this video. Now, if you're looking for supports, what would we be looking at? And we can see all our statistical levels are negative. So the only way we can get support or gauge support is just using key psychological levels. And considering we're only at $3.60, it will just be those key levels. So $3.50, $3, $2.50, $2, $1.50, and $1 will be those key ones. Really, if this stock sinks below $1, which is definitely possible considering the market environment, it would definitely be something to be cautious of, because obviously once they hit below $1, they will either have two choices. They either get delisted from the stock exchange, or they can do a reverse stock split. But usually if a stock has to do a reverse stock split, it kicks off a lot of investors, because it's always seen as a bad sign if the reason they're doing a reverse stock split is just to stay listed. Anyway, hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.